Welcome, traders and investors, to another episode, actually the episode 5, on how your trading is affected by your personality in the phasma of trading psychology, of course. And today we will explore how your personality can influence your trading decisions and your trading performance. So let's dive into it. As for today's agenda, we will go through the different trading personalities. Actually, we will analyzing 4 trading personalities. We will identify how can we identify our strengths and weaknesses, and of course we're going to reveal some strategies for adapting to our personalities. As per the risk rewarding, this content is for general information only and no intention to give trading or investment advice or any personal recommendation. It's for myself. For those who don't know me yet, my name is Theo, and here at Admirals, I'm an investing and trading educator and analyst. I hold a master's in physics. I have more than 10 years experience in trading. I also actively coach traders, and I'm a certified financial technical analyst and member of the Society of Technical Analysts. At Admirals, just a few words about our broker. We offer thousands of tradable assets to choose with. We have, of course, customer support in a bunch of different languages. We have licensed by the SISEC to operate under the SISEC regulation, in the UK by the FCA, in Estonia and by the EFSA, in South Africa, in Canada, in Australia under the Australian ASIC. And of course, our spread, we try to keep them as low as possible to help you, especially for the intraday trading. It's important. And you can access and trade with Admirals through our Admirals trading platform. You can find it on our website. But of course, if you also download the MetaTrader on your computer. So the different trading personalities, we have 4 different personalities. It's the first, it's the trader who is risk oriented. We also have the methodical trader. We have the intuitive trader and the patient trader. We're going to explain all 4 of these. First, the risk trader is simply the trader who is embracing high risks because of the potential to make high returns. This type of traders, they often engage in aggressive trading strategies, and they love to be active, especially with the high volatility conditions. Then it's the methodical trader. This type of trader prefer some more framed approach, following specific rules and specific strategies. And what we know is most of us methodical trader, because we use the charting techniques. Next, it's the intuitive trader. Intuitive trader is a category of traders that they rely on their instincts and their gut feelings to make trading decisions. They may only sometimes have a concrete rationale for their actions, but can sense market trends. For a trading approach in the Forex market, I don't think so it's a good idea to be an intuitive trader, because we use the leverage, because we have so much and so many false breakout conditions. Therefore, it's much easier for a trader to be either a patient trader or to be a methodical trader. So the patient trader is the trader we call discipline as well. And it's a trader who is waiting for the opportunity to come to appear in front of the screen. This type of traders usually avoid impulsive decisions, and they are more long-term traders. Now, understanding your trading personality, guys, it's really important because it shapes how you perceive and really interact with the markets at the end of the day. And each individual has a unique set of traits and emotions that really influence their approach to trading. All right, so gaining a deep understanding of your trading personality can positively impact on your strengths and minimize the potential for your to trade based on your weakness. Okay, we're going to see two examples here to understand it a bit better. So let's assume in this example that we have Mr. John and Miss Mary, and these two traders, they have a totally opposite personality. For this example, I'm using John as a risk taker and Mary as a methodical trader. So John considers himself a risk taker. Therefore, he has a high tolerance for risk, as we explained, and enjoy the high adrenaline that comes when the markets are really volatile as well. When the markets are in a move, John feels excited and he initiates new positions. He often plays trades based on his gut feelings, believing that he can also sense the market. On the other hand, Mary is a structured trader, follows a trading plan, and conduct her research and analyzing trades before initiating them. She prefers to trade assets with low volatility, and she wants to be consistent in her returns. So as you understand, these are two totally different approaches in trading. John's self-awareness as a risk taker helps him identifying trading opportunities that align with his personality. He avoids strategies that involve what Mary does, to analyzing the market and use a structural approach. And he tried to maximize his returns based on this aggressiveness he has in the market. So Mary, as a methodical trader, refrains from engaging in impulsive or emotional driven trades. Her self-awareness allows her to stick to her well-defined trading plan, something we talk all the time on the live morning webinars. And she tries to avoid the pitfall of chasing quick profits based on the fear of missing out of the trade, or the FOMO, as many of you know. Now, at this point, it's good to mention, I don't know you guys participating from the live webinar. Let me read a few names. Yep, I recognize many names that they participate on the live webinar. For those who were today on the webinar, someone asked me, I don't remember who was, why you don't enter, no, yesterday someone asked me why I don't enter the markets with an inside candles, and I always use mainly, and not always, mainly I trade engulfings. And it's exactly because of these four types of traders we have here. My personality is more in alignment with the engulfing price action pattern. And I like to see that kind of shaking in the market and a false breakout in the opposite direction, of course, before it comes and takes my entry. That's what aligns with my trading personality. Simple as that. Now, how your trading personality affect your trading decisions. Guys, it's two different things to know our trading personality and to trade based on our trading personality. Often I see traders, although they do understand their risk tolerance and their trading personality, they take trades that they are not in line with their trading personality. And it's something that you're going to ask me, why are you laughing or smiling? Simply because I see this every single day. And many of you watching this webinar, you'll wonder, okay, we understand. I realize that I'm more mechanical trader and I'm following this approach, but do you really trade exclusively based on this approach? Or have you ever traded based on your gut feeling? Or have you ever traded because the market was super volatile during a major news event and you seized an opportunity and tried to capitalize on that opportunity, but it was a decision that really wasn't in alignment with your trading personality? That's the very important thing to connect at this point, guys. So first is the risk tolerance, then it's the trading style, and the third is the emotional responses. Let's talk for a while about the risk tolerance. In this category, we can say that different personalities have varying levels of risk tolerance. Risk takers may accept larger losses, while more cautious traders may avoid high risk positions that they can come with larger losses, but also with larger winners. Often I see traders, they are always seizing the opportunity to make money, but they don't understand that in trading, the only thing we can impact is how much money we will lose at any single trade. Traders always think in terms of profits, and that's what killing their trading path. Because if you manage your losses and if you manage the money you afford to lose or you are willing to lose in any single trade, the profits, trust me, they're going to find a way to take care of themselves. But if we don't understand what is our risk tolerance and we enter again the reason we don't pay attention to the risk tolerance, it's because we take emotion decisions in trading, those who take emotion decisions. I don't do that anymore after all these years of experience and being an active professional trader. I mean, I was trading in terms of professional accounts for some years in my career. I had to trade exclusively like black, white, and this risk we risk here and this risk we risk there and all this stuff. So risk tolerance, it's something I will encourage you to pay attention to and start understand your trading personality, guys. Okay, then it's the trading style. Your personality can shape your trading style. For instance, traders that trade based on their intuitive, they might prefer short-term trading activity, and traders, they are more patient. They might go on a longer time frames, like the daily chart, 4-hour chart, swing trading. I have friends that they are active traders and they cannot stand being in a trade and go to sleep. They cannot even imagine themselves going to bed and have a trade open. For me, since the first day I start trading, it was so normal and so aligned with my personality. It was okay. It's still okay. Pretty much every day I have running trades. It's totally fine. I don't mind it at all. So that's aligned with my personality, and that's what I do. Especially when I first started and I saw these swings, higher highs and higher lows and higher highs and higher lows on the 5-minute chart, it was frustrated for me to accept the fact that if I buy now after 5 minutes, I will lose maybe the trade. I couldn't accept that. So pay attention to that at the early stage, and I was trading only based on how I was feeling more in control. Okay, guys, any questions? Please use the chat and type. Next, emotional responses. Some people, they trade based on fear and based on greed, based on the fear of missing out, based on greed. Again, it's a fear of missing out that lead us to take all these impulse trades. So again, pay attention to this, and we try to make logic decisions, especially trading Forex and indices with leverage. If we are trading stocks and we invest and we just buy and hold, we're going to do emotional trading. I'm doing a lot of emotional trading when I buy cryptocurrencies, because I buy always when the markets are red, and sometimes it's frustrated. I feel like I buy now, maybe everything it's going to go down to zero. It's a feeling, because you don't go with the crowd. But trust me, we make the money in trading and investing not when we exit the position, when we enter the position. Guys, write this down. Your money, you make the money when you enter, not when you exit. Because if you enter in a good spot, most likely you're going to make your money and it's going to be all right. Okay. Next, some strategies for adaptation. First, we have to play to our strength. We have to identify and align our strength with suitable trading strategies. If we have a methodical personality, for example, we can focus on systems and on chart analysis. The second one is recognize and manage our weakness. So we have to be aware of what our weaknesses are. Maybe we are impatient, or we are risk aversion, and we implement risk management techniques to mitigate potential drawbacks. Okay, and the last one, the third, we have to always be students. We have to always learn continuously. We have to educate ourselves about trading strategies, how the market trends changes, about the market dynamics. All this knowledge will help us to adapt our trading approach much more effectively. Okay. Now, take a moment to reflect on your trading experiences and identify your strengths and your weaknesses. Are you a risk averse naturally, or you do that because of fear? You try to be this type of trader. Do you thrive on taking risks? Is that in line with your personality? Are you disciplined and are you patient? Do you tend to make impulsive decisions? Every trader in this webinar try to think about where do you see strength and where do you see weakness, not in the sentences, in yourself. Maybe at some point you have to admit to yourself that, hey, I'm not a high risk. I don't embrace high risk trading. It doesn't align with my personality. I just do it because other people do it. And I think that's the way you can make money. No, scratch it, wrong. You find what is in line with your personality. If you have strong analytical skills, you consider more as a systematic strategy trader. And to manage your weakness, you can use risk management techniques and, of course, emotional discipline, as we mentioned on previous webinars. And for risk management techniques, the most effective one is to set up stop loss orders when we enter the market. Okay, guys. I think that's all from me today. I hope you enjoy in those 25 minutes this webinar, and I hope you took away 3 key and important things for yourself to start applying them. First, please make sure, if you didn't take notes when we upload the webinar, listen to that again, because you must find out exactly which trading personality you have, and then how you're gonna approach the markets from now on, just so you feel calm and you feel that you are in a line with your trading. And as I will leave you with that, as many times I say to everyone, don't try to fit yourself to the market. Just fit the markets based on your personality. Let the markets do its thing. Find what type of trader you really feel you are, and then act accordingly. So for those who don't participate on the live trading webinars every morning, I host the webinars, so please come and visit us. It will be great to see you there. I will leave you with that. I wish to everyone to have a fantastic day ahead, and I look forward to see you tomorrow at the live trading webinar. Thank you so much, guys.